Thanks a lot and good morning, friends. Today I'm here to tell you something from the point of view of an economist about this entire issue of tariffs, and subsequently we have GST, and then how exactly the MSMEs are going to be impacted, and what could possibly be the help route which could be provided by the government for the MSMEs. So first, to begin with, I think when we started the financial year, there was a lot of optimism that the Indian economy would be continuing to grow in the region of around 6.5%. So that is what the RBI had also projected. And it was assumed that this is something which could be virtually taken for granted. We actually had a blow coming in the month of April when Donald Trump had announced that there would be certain tariffs which would be imposed on all countries. And in fact, America was a country which probably had an average tariff rate around 3.5%. And this was increased to a base rate of 10% for countries. And then there were different tariffs which were announced for different countries based on the trade balance which they had with the USA. At that point of time, India had a tariff of 26%. And if we have to compare this with other competing nations, it didn't seem to be too bad. Of course, what US said at that particular point of time was that there were doors which could be opened for negotiation, and various countries, various groups of countries, when I say various groups, if you look at, say, the European Union, I think they all got together to start discussing as to what could be the tariff situation, what could be the trade relationships between their countries or groups with the United States of America. There was a period of 3 months which was given. That was in August. We said that, okay, for 3 months you can come and start talking to me. And in case things don't work out, then of course the tariffs will be there to stay. So we've seen a number of rounds of discussions which countries have had. There have been negotiations made, Japan, UK, European Union, South Korea. So all these involve basically lowering their own tariff rates, promising to make certain kind of investments in the US. And accordingly, there were certain deals which were struck, and the tariffs remained between 10 to 20%. Closer to India, we had countries like Indonesia, Vietnam, Philippines, which also got into certain agreements with the US, and there were certain tariff negotiations which were done. In between, the US decided that they wanted to put higher tariffs on steel, aluminium, copper, so that was something which came in between. There were some fairly hydraulic discussions with US where they decided, with China, sorry, where they decided to impose very high tariffs on China. China had responded with retaliation, and accordingly, a truce was struck that there would be nothing which would be done to upset the equilibrium for a certain period of time, around 6 months or so. Now, as we come into the month of August, we were hoping that India would strike a deal with the US. In between, where they've already struck deals with the United Kingdom, there was an agreement made. Though, to be honest, UK is not a major trading partner. If I look at the United States and say how important is the United States for India, US is our major exporting partner. When I say exporting partner, in 2024-25, around 20% of our exports, which came to around $85 to $90 million, was actually going to the United States. If you ask me as to which were the commodities which we were exporting, primarily they were drugs and pharmaceuticals, electronics, ready-made garments, gems and jewelry, and leather goods, amongst others. There were, of course, some agri products also which were there. Now, in the month of August, Trump had actually changed his whole view on India, and we saw a new dimension being added, saying that India should not be importing oil from Russia. And if India continues to import oil from Russia, there will be an additional 25% duty imposed, and the 26%, which was initially spoken of, came to 50% in August, and it was said that August 27th was the date by which this new tariff would be imposed. So I think this came as a kind of a shock for all of us, because we felt that there were negotiations going on and there would be a deal which would be struck with the US. But I think subsequently the officials from the US have been very, very vehement in terms of their view on India, of India supporting politically Russia, and this oil import issue has become very, very tricky, and it remains unresolved as of today, as our stance is that we would continue exercising our sovereign rights to import from whichever country we want. Now, all this has meant that there would be certain impact in terms of our exports to the US. And within these exports also, interestingly, the US has said that drugs and pharmaceuticals and electronics would for the present be exempted from this 50%. So essentially they are saying that things which America does not produce or does not have the ability to produce in the immediate run, they would continue with the existing tariff structure. So therefore, we are talking of around 50 to 55% of our exports to the US being impacted by this additional duty of 50%. Now, we all know that the SME sector, or rather the MSME sector, does contribute to around 40% of India's exports. This also means that when we say our exports are going to get affected, it's going to be the MSME segment which will be impacted the most. So if you're looking at ready-made garments, looking at leather products, looking at gems and jewelry, largely they come in the MSME domain. And therefore, it's but natural that MSMEs will once again bear the brunt of this particular economic development which has taken place, which is taking place on the external front. MSMEs have traditionally been vulnerable to any major economic shock or even economic policy. If I take you back towards demonetization, the GST being introduced, COVID, in all these cases we saw that while the larger companies are insulated to a certain extent, or they have buffers, they have the ability to withstand these economic shocks. But when it comes to MSMEs, given their size and the fact that they're not grouped under the large companies where you have industry associations which are continuously having a dialogue with the government, they are largely on their own and tend to get affected most. So even today, when we're talking of the overall impact of tariffs on India, as economists, we have of course gone back to our Excel sheets. We have gone back to making our projections about growth, but how growth could possibly be affected. So while we at Bank of Baroda, we started off with a growth rate of around 6.4 to 6.6% for the year. When we had the initial tariff of 26%, we felt that 0.2% could probably be shaved off. When it was raised to 50%, our calculations show that maybe it could come down by 0.2 to 0.4%. Depending upon the intensity of the shock which our exporters are going to face. And today as we speak, because we have had the GST reforms which have been introduced, which is going to provide a major boost to the domestic economy, I'll talk about that a little later, we feel that the overall GDP growth rate for the economy may remain unchanged at around 6.5%. So when we have the Reserve Bank of India coming up with their policy on 1st October, our sense is that they may not really revise the GDP growth number. If you go by what the Chief Economic Advisor had mentioned after this tariff shock, he said also that 6.3 to 6.8% is something which will be maintained. That is a forecast which the Economic Survey had projected in the month of January 2025, says that that's not going to get affected. Even though he had mentioned saying that GDP growth could be affected to 0.5%. But given the fact that there will be this compensation coming from the GST reform, I think generally it is felt that the overall macroeconomic numbers may not really be dented significantly. In fact, interestingly, during the same phase before the GST reforms came through, we had Standard & Poor, one of the major big three rating agencies, which actually upgraded India's position from BBB minus to BBB, and it was very clearly mentioned that the rating agency did not see overall growth being affected significantly on account of the tariffs. So the macro picture is that the Indian economy will probably continue to move along the stable growth path, and maybe once this is absorbed, we can really aspire to cross the 7% mark in the coming year. But at a micro level, we ourselves have done the analysis, try to see how these three segments will be affected. It is going to be very, very significant. However, there is a silver lining also, which I'm quite sure you people in the audience are in a better position to judge than what we have, because we have been talking to various associations, other experts in this particular field. And we feel that while exports would definitely get impacted because we're competing with countries like Vietnam, Bangladesh, Lanka, Philippines, Thailand maybe, where they all have lower rates. it would take at least 3 to 6 months before this would materialize. Now, why do we say so? Because while definitely our ready-made garments are going to get impacted in case we're competing with Vietnam, which has a lower rate of around 20%, I think, or even if you're talking of Bangladesh, which is going at a lower tariff rate, the ability of these countries to scale up may not be that easy. So if I actually take you back to Bangladesh, when we had the problem in Bangladesh, I remember an issue which came up was that if Bangladesh is suffering, can India actually leverage the situation, especially when it comes to ready-made garments, and we can actually occupy the markets which Bangladesh was leaving behind. At that point of time, when we spoke to certain producers, certain associations in the south, I think the picture which we got was saying that, look, this is something which is theoretically possible, but we do not have the capacity to scale up in the immediate run. We need to buy a plant and machinery. We need to employ more people. We need to, in order to produce the kind of goods which probably Bangladesh will not be able to supply. So I think it's a similar kind of picture out here, because when we are competing with smaller nations like Vietnam, Bangladesh and Lanka, they do not really have the ability to scale up immediately. So while we cannot sit back and rest and say that, look, everything is great, we don't have to worry about it, but I think the impact will not be in the third quarter, that is from October to December, more likely in the fourth quarter and definitely in the new financial year. Similarly, when we're talking of precious stones and jewelry, I think this was also quite an eye-opener for us, that when we again spoke to certain people in this particular business, exporters, I think the picture we got was that a lot of this jewelry is actually customized. We have customization of jewelry which goes to the US. Very often the partner out there could be a person of Indian origin. There are long-term contracts which are there. So definitely it is not a case of saying that from September 1st onwards, we lose this particular market to other countries. That's also not something which will take place, but it would take some time before it really happens. So I think we have this kind of a breathing space of maybe around 3 months, by which I think certain action can be taken. And I say certain action, one action which can be taken is probably by the government getting into a deal with the US. And we already know that some talks are on the way. And it's quite possible that by the time we come to November, December, there could be some productive talks from the Indian side, which really means that instead of 50%, you could be ending up with something around 25%, which was the original tariff which was imposed. But of course, right now that is hypothetical, it's something work in progress, but we may have to live with this particular higher rate which we are talking about. The second issue which is there, which again I think is fairly relevant as far as we are concerned, is that what exactly is it that the government can do at this point of time? Okay, with a lot of expectations that the government should do something to revive, to support the SME sector. And out here, I think what we can say is that, number one, the amount of support which is provided on the fiscal side, something which is done on the monetary side. So when I'm talking of, when we're talking on the fiscal side, one thing which we have been suggesting is that if we do have a PLI scheme for the MSMEs, I think this would be the appropriate time to be having it. In the past also, we have spoken of a PLI scheme for MSMEs because the PLI scheme has had a kind of a mixed reaction. If we're talking about solar, EVs, I think there's been positive things. For other commodities have not quite worked out. But I think if you're able to have a dedicated fund, a PLI fund for the MSMEs, at this particular point of time, I think it will be very, very productive, very, very much useful. This is something which the government is probably working on, and we may have something coming up. Second, in terms of our exporters, if there's taxes to be given to exporters based on performance, that is something again which could be of use when we're talking of providing support to the SMEs. I think this could be done on the fiscal side. On the monetary side, I think there are some things which are very practical, which we are also expecting, because when you're looking at this tariff situation, it is very much analogous to what we had during COVID. COVID was once in a lifetime. I think the tariff was also a once in a lifetime kind of a situation. So in this kind of an emergency kind of situation, what could be done was, number one, probably we could ask for a TLTRO kind of an operation for the RBI. If you remember, during COVID time, we had TLTROs for specific purposes. That's why they were targeted. There were funds given to the banks at the repo rate so that the banks could on-lend it at a lower cost, mainly for the MSMEs. This kind of a scheme could definitely work. Number two, we could have an interest rate subvention. When we're talking about subvention, we're talking about 1 to 2% subvention for the point of view of the government, where the government pays for it. That would provide a lot of relief to these exporters. Number three, we could also talk in terms of a credit guarantee program being given. So we had the ECLGS during COVID time. So having a similar kind of scheme would definitely provide some incentive for banks to be a bit more aggressive when it comes to lending to SMEs. So I think these are the 3 points which are being spoken of, something which are being considered by the government. And when we're talking of some kind of support program to be provided by the government in conjunction with the RBI for the MSMEs affected by exports, by exports getting affected on account of tariffs, I think these are very much on the cards and something which could be done to support the MSMEs. Now, on the positive side, if I just move a little bit into the GST part, the GST theory which is there. Now, the GST reforms have been brought in for 2 purposes. So the government is talking in terms of a net outflow of 48,000 crores in terms of revenue foregone, which will go to the consumers so that people will be able to spend this money. And given the fact that it gets validity from September 22nd, it really means that there's going to be a big boost to consumption in round 1. And that itself is something, if I combine with the income tax benefits which have been given during the time of the budget, 1 lakh crores, that of course is something we should remember, it accumulates over time, because when my tax burden comes down, I may not feel it in month 1, month 2, month 3, but by the time it comes to the 6th month, that is September, October, which is our festival season, there could definitely be some kind of boost to consumption of both consumer goods, automobiles, as well as housing. That's what we see. The second part of it is that I think the way which we look at it is where a lot of good has been done by the GST reforms is correcting the inverted duty structure. So you had a case in a number of industries where your inputs were being taxed higher than the output. So I think this is something which the GST reforms too has actually addressed, and this is something which should help the MSMEs in terms of becoming a little more competitive in terms of costs. Because when we're talking of tariffs, when we're talking of competition with other countries, when you're exporting to the US, let's assume the worst case scenario holds and the 50% duty holds, which means our costs, our prices are much higher. So how exactly is this burden going to be distributed? One is, of course, that the buyer will take on a certain kind of cost, but anything more than what your competing country is being charged is something which may not be absorbed. So it's a case of becoming a bit more cost competitive. And I think it may not be a panacea for the problem of MSMEs, but definitely to the extent that your costs come down, it will be easier for one to compete in this kind of market. The second thing which we feel, based on what RBI action has been in the past, is to actually let the rupee depreciate. Now, we have a situation where the rupee has been very volatile. In fact, the rupee had crossed 88, people spoke of 89, 90, but as I speak to you today, it's actually gone into 87, 70, 87, 80. So it's fairly volatile. But in this kind of a situation, letting the rupee depreciate, I think it's going to be another tool which could be used by the RBI. Not overtly, but definitely there's something which will help to narrow down this cost difference which we have when we're talking in terms of our exports, the companies who are exporting. So that could be a second kind of a benefit. So the way in which the MSMEs may look at it is that government could do something, the RBI could do something overtly in terms of some kind of a program coming through, like what I mentioned about subvention, or you're talking of a guarantee scheme, or a TLTRO coming in for MSMEs. But there could also be these other 2 things which are working, which means that there could be some advantages in terms of cost on account of GST. There could be some kind of a benefit from a weaker rupee. But all the time when I talk of a weaker rupee, we have to see as to how is the rupee performing compared to the competing nations. The rupee should depreciate more or appreciate less, because today we have a situation in the US where it's very much likely that today, in the night when the Federal Reserve meets, there could be a rate cut. And the moment the Fed starts cutting rate, the dollar is going to start weakening, which means that the rupee should actually be strengthening. All currencies will become strengthening. So there could be kind of a managed intervention by the RBI to make sure that we don't depreciate faster than our competing currencies, so that we continue to have that export advantage. And the last thing I'd like to talk about in this limited time which Arvind has given me is that we have a credit policy coming up. See, personally, I feel that we are probably come to the end of the rate cycle, because if I go back to the June policy, the RBI had mentioned that there are limits to which interest rates will be in a position to push up growth. And now that we feel that growth will still be in the range of around 6.5%, which is what the RBI had started off the year with, there is no threat as such to the overall macro number. On the other hand, if you look at inflation, it has been very, very benign, coming in at 2% or so, and it will probably end up at around 3.1%. The reason being that the GST cuts will significantly bring down inflation, especially the core inflation, because manufactured products are coming, prices are going to come down, which really means that inflation will be within 3%. Now, the whole question is that at a repo rate of 5.5%, will the RBI go down further to 5.25 or 5%? There is, of course, a difference of view between various economists and analysts. A lot of them feel that there is still room for a rate cut of 25 basis points. I feel that in case there is a specific package for the SMEs which is being drawn up, a rate cut could be a part of it. But we do not expect it to happen in the month of October. So on October 1st, when our policy is announced, I doubt whether there will be a rate cut. But probably if you go ahead to December, depending on the overall economic situation, because at that point of time, there'll be a clearer idea about how much have our exports been affected. One thing I must point out that our export performance until August has been fairly impressive. It's been around 5-6% deficit was lower than that of last year. But we should not get too elated about it, because this is not a period when the tariffs were actually in force. The tariffs actually came in from August 7th, so from September onwards, the impact really come through. And there was also a case of some kind of a push which came in for exports, because even from the point of view of the American importers, they wanted to expedite certain imports before the tariffs came in from August 7th, which was a date for the rest of the world. So therefore, it might have been bumped up to a certain extent. So I think September onwards, that is from October, November, we'll probably have a clearer idea about how much exports have been affected, whether our GDP growth will actually be in the 6.5 range, or is there any kind of a major threat to it. And more importantly, after the heavy rains which all of us have been witnessing, it's been very, very severe in Punjab, parts of Maharashtra, Andhra Pradesh and Telangana. There is news of damage to crops. Will this actually lead to a spike in food inflation? Possible. But we need to wait and see. October, November are the months where typically what we say top inflation, tomato, onion, potatoes, the prices tend to increase because of the erratic nature of the monsoon. In the past, we have seen that the inflation from this part pushes up vegetable prices. So we'll get a clearer idea probably by December. That's when the RBI or the Monetary Policy Committee could probably take a view that there should be a further rate cut. But as of now, I think a status quo is what we see in the month of October. That's from my side. Thank you.